All right, everyone, we're back, and it looks like we've still got quite a few people joining. But for those of you that were punctual with us this morning, we appreciate that. So we're going to get started. And really, the question is, what is happening in today's under 65 healthcare market? And Mike has been kind enough to gather as much information as we can possibly get up to a very current level. And we're going to be talking about the American Rescue Plan and the basics of who, what, where, when, and how this applies to you and the number of clients that you're out working with and the opportunity that we see for you as an independent agent. As we go through the presentation, I'm sure there's going to be a lot of questions. We'll ask you to hold as many of those as you can for the Q&A that we'll have at the end of the presentation, and we'll try to touch on some of those through the question box as we move through as well. But by and large, we ask that you do hold your questions. So we think we'll probably touch on a lot of those factors as Micah goes through his presentation. If you've got questions about how to get contracted or what contracts are available, you can reach out to us here at 866-568-9649 and ask to speak to a marketing director or to someone in producer support, and they'll be happy to direct you to your SureLC online contracting profile. Very easy, very simple, all electronic once you get that set up, and we'll get those processed for you as fast as we can. So without further ado, because I know we've got a lot of information to cover, I'm going to turn it over to my good friend and teammate, Mr. Micah Matthews. Micah, take it away.
Thank you, Jeff, and thank you to everyone for attending today. As Jeff said, we've got a lot to go over. Just wanted to show you to start off with Messer Financial. This is our website, what you're seeing on the screen. This is our home page, messerfinancial.com. You'll be able to see here, there's a calendar, and that's where all of our webinars are going to be posted. So if you ever want to know what's coming up, any additional information, you can register right there. Also, if you haven't done so yet, make sure to follow us on Facebook, also on LinkedIn. We have a lot of updates and ways to register on there as well. And we obviously want to keep you updated. As a matter of fact, I know it seems like I just did one of these not too long ago, and that was back in February. But the fact of the matter is, folks, things are changing. I'm sure you all have heard the stimulus has been approved. And one of the things in the stimulus is marketplace. It's going to be affecting the marketplace. A lot of additional money. And that's what basically we're going to be going over during this webinar. Now, this webinar particularly is going to be a little more high grade. So if you're brand new to the business, you'll probably want to go back and watch one of our previous webinars that we've done. I know I did an introduction to ACA. I also did one not too long ago just discussing this SEP. If you ever want to go back, all of our webinars that we've done in the past are posted on our website under Agent Resources, under Messer Learning Center. You'll see it right here. So when I click on that, you can go back and watch any webinar that we've done. So if I want to learn about the ACA, talks about specific carriers, here's the ACA landscapes, all kinds of different things. And again, introduction to ACA for those of you who are just getting into the business. So with that, just wanted to make sure that you guys can see that. Obviously, you can go back and watch it any time. But like I said, I've got a lot of information to go over. You should see a questions area where you can type in any questions that you might have. Keep in mind that chances are I'm probably going to go over just about all the questions that you might have. So keep that in mind. You may just want to take some good notes as we go. And then obviously we will have time at the end to go over any questions that you have. I'll try to do my best to answer all of them. So let's go ahead and jump right into it, folks. Let's see here. Slideshow. Okay. Okay, so what we have here is this is the American Rescue Plan and the marketplace. That's what President Biden is calling this, and all the changes to the marketplace. And this is what we're going to be going over. We'll have some breaking news. And actually, when I say breaking news, this just came up 2 days ago. So obviously, it's still changing, and things will continue to change, and we'll try our best to keep you updated as quickly as possible. We'll talk about what is the American Rescue Plan, what effect this will have on the marketplace, which I promise you will be huge. And folks, I can tell everyone on this webinar that I've been doing this a long time, ever since the ACA's inception. And I've not seen a bigger opportunity than what we have and what we're going to go over. So again, I think that this is going to be well worth your time to attend. Who will this impact? There are going to be more affordable options available. I'll discuss how that's going to be. how many folks will be impacted, which is millions, household impact, changes in subsidy, enhanced subsidies, unemployment. That's another big topic that we're going to be discussing. When can you quote and enroll this? Because I know that's the million-dollar question, right? How will this affect my business overall, and who is the ideal client for this American Rescue Plan? And then how do I market this opportunity? So basically, I want to make sure that when we get done with this webinar, you have a strong understanding of what's going on, how this is going to impact your business, and how you can take advantage of it, because it is time to grow, guys. All right. So here was the breaking news. Like I said, this happened 2 days ago. On March 23rd, President Biden announced that the CMS is extending access to the special enrollment period, this SEP, until August 15th. So originally when it first came out, it was supposed to be from February 15th to May 15th. Well, since then, they have extended it now to August 15th. So basically, guys, they've had an SEP now for March 1st, April, May, June, July, August, now September, effective dates. So again, they're doing everything they can to get as much enrollment as they can, because at the end of the day, what we have to understand is the number one indicator whether or not the ACA is successful or not is based off of how many people enrolled in it. So, and to me, it doesn't even seem like they care how they get the enrollments; they just want the enrollments. This action provides new and current enrollees an additional 3 months to enroll or reevaluate their coverage needs, with increased tax credits available to reduce premiums. And I'm going to tell you some numbers on here to show you just how many people are actually going to be able to qualify for subsidy. And basically, it seems like it's almost everybody, but I'll go over that in a little bit. Okay, so what is the American Rescue Plan? President Biden signed the American Rescue Plan Act of 2021. And why I say that is because this particular bill is only affecting 2021. Into law on March 11th, 2021. The ARP, which is what it's known as, makes major improvements in access to and affordability of health coverage through the marketplace by increasing eligibility for financial assistance to help pay for marketplace coverage. So basically what they've done is they've added a bunch of subsidy money to those that are already qualifying for subsidies, and they've also extended it outside of the 400% poverty level, and I'll show you exactly what that means here in a little bit. So more people can now enroll and qualify for subsidies, and also the people that are getting subsidies are getting more. I've mentioned this on previous webinars that the enrollment factor is absurd as far as how many millions of people this is actually going to impact. The new law will lower premiums for most people who currently have a marketplace health plan and expand access to financial assistance for more consumers. Those who received too much subsidy, get this is big. I'm sure anybody who's been doing the ACA has had someone who's had to pay back too much subsidy money on their taxes. Well, guess what? If they receive too much subsidy by underestimating their income or whatever the case may be in 2020, they won't have to pay it back in 2021 on their taxes. That's huge. Also, people who received unemployment income will not need to pay taxes on the payments up to $10,200. So if you know anybody that's received an unemployment check this year, they won't have to pay taxes on that all the way up to $10,200. Okay, these are big changes. More affordable options are available. Many premiums will decrease on average by $50. This is, of course, on a national scale. Some states will be much different, and really, the changes aren't even going to be just for the states. It's going to be for counties too. So it's really going to be specific on how much of a difference these changes are going to be. But so many premiums will decrease on average by $50 per person per month and $85 per policy per month. Pretty strong for an individual. 4 out of 5 enrollees, so that means 80%, which is up from 69% pre-ARP, will be able to find a plan for $10 or less per month after tax credits. And over 50%, which is up from 14% pre-ARP, will be able to find a silver plan for less than $10 a month. So what that means to me, guys, is the days of, oh, well, yeah, I qualify for a subsidy, but it's still not affordable. That's not going to be the case anymore. It's making it seem like they're trying to get not only people enrolled, but they're trying to get people enrolled at extremely low premiums. All right. 1 out of 4 enrollees on healthcare.gov, that's 25%, will be able to upgrade to a higher plan category that offers better out-of-pocket costs at the same or lower premium compared to what they're paying today. So guess what, guys? That means that people that are on a $0 bronze plan, it's very possible that they could qualify for a $0 silver plan or any kind of benefits like that. So if they were paying, $150 a month for a bronze plan, might be able to pay 150 for a silver or whatever the case may be. There's going to be all kinds of options with this increased subsidy. So just keep that in mind when we're going through this. Okay, who will this impact? So I like to always give out numbers because I think it gives us a better picture of just how big of an impact this is going to be. But more than 200,000 people signed up for marketplace coverage through healthcare.gov in the first 2 weeks of this SEP. And remind you, this is before even these new changes, this increased subsidy is going in. So just the fact that they extended that they added the SEP the first 2 weeks, so that was basically from February 15th to March 1st, 200,000 people enrolled, which is 3 times higher than where they were last year at that point. So obviously, just the fact that they're having an SEP is increasing, plus now they're adding subsidies, it's going to be huge. Now, following the passage of the ARP, more than 14.9 million Americans who currently lack health insurance and many current enrollees will receive additional financial support to find the coverage that best meets their needs at the price that they can afford. So again, they're extending those. They're extending the incomes. They're a lot of these people who were laid off or lost their job or moved to an area that didn't have insurance are now going to be able to enroll. This is basically an open enrollment period where they've basically pumped in a bunch of money and extended who can qualify. So and unfortunately for us, it kind of means a lot that the quotes that we ran during open enrollment last year may not be valid anymore. So anyway, so who can I enroll in this? Those with no coverage at all, those already enrolled in a plan on or off the exchange, those enrolled in other types of coverage such as short-term medical, health sharing plans, fixed indemnities, and even those, and I will just go into further detail on this unemployment thing, but those who have received unemployment income at any point in 2021 will also be able to enroll. So new waves of people being able to qualify. And I will say that this is going to have a huge impact on other markets too. So short-term medical market, the group markets, things like that are going to be heavily impacted by these changes. So as I mentioned, about 14.9 million Americans who currently lack health insurance will be able to save money on their premiums to find the coverage they need at a price they can afford. 3.6 million uninsured people are estimated to be newly eligible for health care coverage savings. So that's 3.6 million who didn't qualify for a subsidy before are now going to qualify for subsidies. Okay. 1.8 million uninsured people are estimated to be eligible for $0 benchmark marketplace coverage. For those of you that don't know what benchmark marketplace coverage is, that means it's the second lowest silver cost sharing plan available in a market. And that means you're going to get zero. So 1.8 million people, uninsured people, are estimated to be able to qualify for a $0 cost sharing plan. So these guys don't even have insurance right now, and they can get an unbelievable cost sharing plan that's going to lower their deductibles, lower their co-payments, increase their prescription coverage. That's a huge number, okay? Let's see. Since PTC eligible individuals with incomes below 150% of the FPL will now qualify for 100% premium subsidy for the benchmark marketplace plan. So what that basically means, folks, is if you're at 150% level down to 100% poverty level, you're going to qualify for a $0 cost sharing plan. There will be a $0 cost sharing plan available to you. That was not the case before. And when we get further into this, I'll show you the graph and the percentages that reflect this. Millions more are eligible for $0 coverage for non-benchmark plans. Okay. An additional 9.5 million uninsured people with incomes between 150 and 400 of the federal poverty level are estimated to potentially qualify for additional financial support to reduce out-of-pocket costs. And really, folks, the only ones that wouldn't qualify would be those that don't qualify for subsidies at all because they still make over the amount. So, and honestly, in these days, 90% of the country is going to be able to qualify for a subsidy, pretty much. Okay. So how will this affect your household? So here's some examples. An uninsured couple earning $70,000 a year, household income, could save more than $1,000 per month on their monthly premium. So I don't know about you, but I think a couple that makes $70,000 a year would greatly benefit by saving $1,000 a month on premium. A family of four making $90,000 will see their premiums decrease by $200 a month. I think that would be pretty outstanding. I would take a $200 a month decrease in my premiums. An individual making $19,000 will be able to find health insurance coverage with no monthly premium. So if you have an individual, they make $19,000 a year, they're going to have $0 cost sharing options. $0. That's outstanding. That's never been that way before. Some areas, sure, but not in all. And that's a savings of roughly $66 per month on average. All right, this is what I was talking about as far as the charts. Okay, this is going to show you the different poverty levels over here, 100% all the way up to over 400%. Right? Look at this, 0%, between 0 and 150%. That means that they're going to have a plan that has a zero cost to it. That's a big change compared to where it was 2% of their income or 4% of their income, whatever it is. Now it's 0. And even people that are up to 200%, it's changing. It's not 2% anymore. It's as high as it was 4%. Now it's 2%. And if you look down here, this is the biggest change, folks. Before, if you were over 400% poverty level, you could not qualify for a subsidy, period. Now that's not the case. Now, if the premium is higher than 8.5% of your household income, you get a subsidy. Okay? So we've got people that are between the 100 and 150% levels getting $0 cost sharing plans available. And you're going to have people, and again, this is all based off of the benchmark plan. So this is a silver plan that can't be over 8.5%. All right. So that means that, they could have a 7% and they would still get a subsidy on their bronze plans or whatever else there might be. Okay. Huge changes, huge impacts on subsidies, huge impacts on premiums. So this is what everybody's been asking about, the unemployed. Okay. So it does not matter what the household income is on a plan for someone that's unemployed. They're going to qualify. If you received an unemployment check, well, let me read this first and then I'll explain it. The ARP provides for enhanced marketplace subsidies for people who receive or are approved to receive unemployment insurance benefits during any week in 2021. So if you received unemployment check at any point, you're going to be eligible to enroll in the marketplace with the subsidy. Household income in excess of 133%. So let me go back real quick and show that again. 133%, that's right here. So anybody that received an unemployment check, it does not matter if you make $1 million a year or if you make $0. If you receive an unemployment check, they're going to put you at the 133% federal poverty level. So again, what's that mean? You're right here at 133%. You're going to have a $0 cost sharing plan. So think about that. You've got somebody who makes $1 million a year. If he gets an unemployment check and does not have group coverage offered to him that's deemed affordable, that he's going to qualify for a $0 premium on a cost sharing plan. And all of this is effective all the way until the end of the year. Okay? So household income in excess of 133% FPL will be disregarded for purpose of determining eligibility for marketplace premium and cost sharing subsidies in 2021. As a result, people who receive unemployment insurance benefits at any time in 2021 will be eligible for a zero premium benchmark silver plan with comprehensive cost sharing subsidies this year. What a deal, right? So these enhanced marketplace subsidies for unemployment insurance recipients are only for 2020 coverage year. But I got to tell you guys, and it says here, Congress would need to enact further legislation to extend unemployment insurance subsidy enhancements beyond this year. They've already got it in place, everyone. So get ready. The next bill is already coming. That's why I wanted to specify earlier when I said ARP for 2021, because they're already working on 2022. And what we also have to keep in mind is it's one thing to give out free insurance or additional money from the government, right? That's one thing. That's kind of like what happened with the ACA. It's a totally other thing to take it away from people. Because what happens is when you start subsidizing, the people get used to that. They get used to the subsidies and what they qualify for. and you can't just take away those things from them and leave them with nothing. So, in a sense, what to me, and this is my personal opinion, is that it seems that they're trying to enroll so many people and embed it into our culture so much that there's really no way that you can ever undo it. You just have to work a way to make it work. Okay, kind of like what President Obama did back when they brought in the ACA. They brought so many millions of people that were qualified for subsidies, and a lot of people that were paying $0 insurance, so embedded that they couldn't undo it no matter what happened. So no matter what happens moving forward, they're going to have to basically deal with something like this and keep improving on it. And like I said, things will continue to change. All right. A person receiving unemployment income would still need to attest that they do not have an affordable offer of employer-sponsored insurance from their spouse or other family members. So again, if so, let's say that you have a married couple and the spouse received an unemployment check. If they could go onto their husband's or wife's employer-sponsored plan and it is deemed affordable, then that would be the only disqualification as far as them being able to qualify for subsidies. Okay, they still would have to attest to that. It did not, unfortunately, this new law did not do anything about the family glitch. For those of you that do not know what the family glitch is, it's basically saying that what is deemed affordable coverage is only based off of what the employees being offered, not the family. So if it's affordable for the employee, then it doesn't matter what the spouse's is, it's still going to be deemed as affordable. All right. Temporary COBRA premium subsidies for 2021. For those of you that don't know what COBRA is, it basically means that when you come off of a group policy, you have 18 months that you can continue paying for your own group insurance at the full rate, and then after 18 months it's exhausted, and then you have to move off of it. That's what COBRA is. Now this affects COBRA. So how it affects it is the ARP provides for temporary COBRA premium subsidies for up to 6 months during 2021. Okay? Subsidies will cover 100% of the monthly cost of COBRA. So if you know anybody that's currently on COBRA, guess what? They can get a subsidy too, and it'll cover 100% of the cost. So subsidies will cover 100% of the monthly cost of COBRA while people are eligible. The law requires, so this is where it comes in, the law requires the former employer to pay the COBRA premium for subsidy-eligible individuals. So even though it's a subsidy, the employer will have to pay for that cost, but the federal government will then reimburse the former employer for this cost. So anybody that's on a COBRA plan can get their plan at zero cost. The employer would have to pay this, but then the government would reimburse the employer. Okay? So you also might want to talk to the employers to let any business owner or whatever, if they have employees, let them know that this is the case. The COBRA premium subsidies can be paid for coverage months no earlier than April 1st. So this is only going to affect the premiums for those that are between April 1st of this year and no later than September 30th of 2021. Okay, after 2021, then they're on their own again. The subsidy can end earlier than September and September 30th in some circumstances. It ends when COBRA coverage is exhausted. So like I said, COBRA exhausts after 18 months, so it would end if it's exhausted. So for example, someone who first became eligible for COBRA due to a job layoff on March 1st, 2020, could continue in that plan for 18 months or through August 21st. That person could claim the COBRA premium subsidy starting in April 2021, but the subsidy would stop when COBRA exhausts at the end of August. People also lose eligibility for the COBRA premium subsidy once they become eligible for other job-based coverage. So if you've got somebody who left a job, they go on to COBRA, then they find another job that offers group coverage, then they would lose that subsidy. Okay, if this happens, people must notify their COBRA plan administrator or risk owing a penalty. So you always want to make sure that they know what the deal is. Okay, that's for COBRA. So the $1 million question, right? When can I quote these plans? When can I see the changes? When do I know the rates? Well, starting on April 1st, consumers will be able to take advantage of increased premium tax credits on high-quality healthcare plans when they enroll in coverage through healthcare.gov. Okay? CMS says that it actually will go into effect April 1st. So if you have somebody that needs an April 1st effective date, you can still enroll them. but you would have to go back in and update their information after they're enrolled. All right. Additionally, beginning in early July on healthcare.gov, consumers who have received or have been determined eligible to receive unemployment compensation for any week during 2021 may be able to get another increase in savings when enrolling in new marketplace coverage or updating their existing marketplace application and enrollment. So what does that mean? That means that the reason that I see them extending this like they did to August 15th is because of the fact that originally you were supposed to be able to do this unemployment thing enrollment effective April 1st. But apparently they weren't able to put it all together in time. They've had to extend it. So now if you do want to enroll and you have received an unemployment check at some point, and that's the reason why you're enrolling to get those $0 cost sharing plans, you won't be able to do that until early July. Okay. And the fact of the matter is they still haven't given us an exact date yet. All they said is early July. So obviously that's going to be something that everybody's looking into and waiting for. But basically, guys, as we know it, healthcare.gov is going to change. It's going to change how it looks. It's going to change how it operates, just about everything. So just keep that in mind. Okay. So again, just to summarize, on April 1st, you will be able to go in to healthcare.gov or your enrollment platforms and requote your clients, and you will get the updated information. And then July, at the early July, that's when you can do it for unemployment. Okay. So what if the client does nothing? What if your client doesn't want to have to go through all the hassle of updating their information, requoting, looking at different plan choices, or they just say, you know what, I don't want that extra subsidy? What happens? Well, if the client does not update their information, they will receive the additional tax credits when they file their taxes the following year. Okay, maybe a good option for those that are healthy. And what I mean by that is, I'll give you an example. My father is one of those people. He qualifies for a $0 bronze plan, and he doesn't use his insurance as it is. So for him, because he's healthy, he says he's going to keep the bronze plan, just take the extra credits instead of increasing to his benefits or even looking at silver cost sharing options. And a lot of people just might say, I don't want to do the hassle either. So if you have those clients, which there may be plenty of them, you're not doing them a disservice because they're going to get the money anyways for their tax credits. The only benefit is, again, you can increase your benefits if they do update their information and either lower their premium or increase their benefits at no cost or whatever they decide to do. Also, if you have a carrier that raised their premiums tremendously in a certain area, after these subsidies, it may not be such a big difference anymore. So they may want to move back to that carrier. Unfortunately, instead of it just being at a one effective date, like I would have loved for it to have been just a 9/1 effective date, but unfortunately they're doing it for every month. So the swapping could get really out of hand as far as back and forth between carriers, because really I can have an April 1st plan, and then I can change the carrier May 1st, I can change it again in June, change it again in July, et cetera, et cetera. So it's gonna be very interesting to see how all this plays out. And again, things will change, but just keep that in mind as well. How will this affect my business, guys? Growth. I recommend everybody go out there and try to find as much new business as you possibly can. It's going to grow your book of business, all of your product lines. ACA does not just grow ACA, it grows all lines of business. Because I got to tell you, most people that are under 65 will turn 65 one day. There's your future Medicare business. They're going to need dental. They're going to need indemnity plans. They're going to need final expense, whatever it is. And now that they're even including more higher income folk into these subsidies, well, now you can even talk about other life insurance policies, right? And like I said, with the short-term medical market, it's really going to impact that, because if you've got somebody that went to the short-term medical market because they weren't qualifying for subsidies, but now they do, where now their premiums are lower by going to the ACA, or even if they're the same, it's gonna play an impact, because as we know, short-term medical, they do pre-existing conditions, and ACA does not. So they cover from day one all coverage. So I see a lot of change going on in that manner. So if you do have short-term medical folks, please make sure to contact those guys and see what they qualify for. Clients for life. I mean, really, we do this for renewals, right? That's what this whole purpose is. That's why we do health insurance, is for the renewals. And with ACA, most carriers are paying first-year commission every single year. They're paying high bonuses now. So again, if you want clients and you want to stay renewal stream, I can't think of anything better than to get them before they turn 65, right? And like I said, steady income stream forever. Now, one thing I wanted to show everybody, bear with me a second here before I move on. As I said, it's going to influence based off of counties. I have this chart here. This is for Florida. Okay, this is an example, but this is to give you an idea. The one that's going to win is going to be the carrier that's going to win is who has the zero cost sharing plan, right? Because the reality is there's only going to be one, maybe two carriers in every county that's going to have the zero cost sharing plan. And if you look here, it's by county, and every county is different. So you've got carrier one and carrier two. This is the first lowest cost sharing plan, second. So there's areas where you're going to have, different carriers having the zero cost sharing plan, and people that again maybe moved off of a carrier now they've got another carrier that's a $0 cost sharing plan. Are going to want to look at other options. So we won't know what the best option is until we start quoting April 1st. We won't know that. So again, you basically have to go in and re-quote everybody that's interested in doing something like this, that's interested in taking advantage of these opportunities. Also wanted to show you just how much of a difference it is per county and what they're allowing. This is counties. This is the new subsidy eligible. So you see here, it shows what the maximum was, 355, 400. This is what they're getting. Now look, some of these areas are going as high 732% for a subsidy. 94,000 individual can still get a subsidy in Monroe County, Florida, for a 20-year-old. So again, we won't know what the rates are. You won't know anything really for your clients until April 1st when you're able to quote this. But I just wanted to show this to you so you can see how much of a difference it was. So like I said, for that one that was 700% before, the most you could make was 50,000 to get a subsidy. Now, guess what? 94,300. Single person, 20-year-old. Let's look at a 60-year-old. Look at that. Now we're up 1,000, 1,200%. Individual, still getting a subsidy. Huge incomes, all now qualifying for subsidies. And this is just a single person. You want to look at family? Let's look at a mid-family. This is a couple age 40, so a family of four. 233,000 still qualifying for a subsidy. 400,000 still qualifying for a subsidy. Absurd, right? So people can no longer estimate, just basically estimate off of their own numbers. Oh no, I don't qualify for subsidy. I make too much. Well, have you checked that? Because there's a good chance you might. So there's going to be a lot of stir up. There's especially in those areas where there's a lot of different carriers. We got to look at this kind of stuff now. Network's going to become very important because before, price is always going to be king. But now if everybody's zero, now you got to look at the benefits. Now we're talking more like Medicare, right? Well, now we got to look to see, is the network strong? What do the benefits look like? What's the co-payments? What's the prescription coverage, et cetera, things like that. All of this is just changing. So how will this affect my business? Like I said, all the growth opportunities. I highly recommend as soon as the bell rings on April 1st, go out there and start marketing this. Get out there and find new clients. You can always come back to your current clients later on and advise them what they need to do and make sure that they're happy. But this is the opportunity to grow. And I promise you guys, don't be lazy out there either. Because if you don't ever reach out or do your due diligence to let your clients know about this, somebody else will. There's going to be lots of agents marketing this stuff. Make sure you don't lose your business. And again, it may not even be in their best interest to take advantage of this. They might say, I don't want to go through the hassle, or I want the additional tax credits. That's fine. But you still got to let them know, because if you don't, like I said, someone else will. Okay? Who is the ideal client for this ARP? Extended OEP, basically just saying that anybody who didn't have time for whatever reason to enroll last open enrollment period, now they still have time. Currently enrolled members, anybody that you talk to. And if I were marketing this, guys, I'll be looking at two things. I'll be looking at those that are unemployed. I'm looking for those that are currently enrolled into the marketplace, because those two people you can guarantee to save them money. I can guarantee you that I can at least save you money or increase your benefits at no cost to you. How can you not sell that? People should be jumping at the chance to talk to you. We're like the the gift makers. We're over there saving people money. The worst case scenario from them talking to you folks is they're going to be better off. And then guess what happens whenever someone talks to you and you save them money or you get them a better plan? They refer you. They want to tell their friends about it. If you knew that by talking to this person that you're going to save money, then I'm going to tell everybody about it. I want everybody to be able to prosper like I did. So anybody that's changing from temporarily laid off to unemployed status, which with COVID and everything the way it is there's a ton of them out there. Somebody getting a new job with no employer provided health benefits and or loss of Medicaid eligibility. Anybody that's moving an individual to coverage ICRA, ICRA's going to be questionable now because you don't qualify for a subsidy, so that actually may change. I think this is also will have a big impact on anybody who's going to want to do ICRA, because you got to think about it, folks. If you've got an employer that the average employee is making under $150,000, then why even have a health plan for them? Let them go to the marketplace and get subsidies. And that's the whole idea, right? They want to get everybody enrolled, everybody a chance to enroll into this marketplace. And we knew from the beginning, if all they were going to do is get unhealthy people and low-income people enrolled into it, it wasn't sustainable, because the claims are going to keep increasing, premiums are going to keep going up, and they don't have the healthy people in there to balance out those premiums. So for it to be sustainable, they have to have everybody, and that looks like that's the direction that they're going. And then obviously, also the clients who received unemployment in 2021 is a must. So how do I market ARP? There's no regulations. I can go and say whatever I want to, basically, on a social media platform, through signs. I mean, I especially down in Florida, I know you guys have seen this everywhere. Signs all over the place marketing Obamacare. Us here in North Carolina, I know I've seen a bunch in my area coming up there. Just put, see what you qualify for, whatever the case may be. Business cards. If you don't have business cards and you're in this business, then I don't know how you're doing it, because people's memory just isn't that good, quite frankly, especially when you're dealing with names and contact information. So have something there. Let people know what you do. Put it on there. Go to businesses. Like I said, this is going to have a big impact on small group for sure. If you've got if your average employee is making $50,000 and you're offering a group plan to them, I don't know why that is. Homeowners, new homeowners, that's a huge untapped market. If you just moved into an area, then chances are you don't have a health insurance plan unless it's through an employer. And if you do, you're probably going to have to change it because you moved. And chances are you don't know anybody, so therefore you don't even have an agent. Go get lists go buy a list of new homeowners in a certain area. Mailers, send mail out to people. Just whatever you can to get in front of people to let them know that you're marketing the ACA is where you need to be. Okay? Bonus opportunities. And I don't know how long this is going to last, guys, but I know for sure that I'm going to take full advantage of it. These carriers are offering bonuses and better. If you write 10 members during this SEP, you're going to make $100 per member. If you for every member that you write with Bright Health, you're going to get a $125 bonus. Oscar has bonus incentives. Cigna bonus incentives. AvMed, almost every carrier out there has an SEP bonus opportunity, and they're going to keep changing now that they've extended the enrollment to August 15th. I don't know how many carriers are going to extend that. We'll obviously keep you posted on them as they come available. I'm sure the carriers will as well. But I mean, guys, these carriers are paying ridiculously high commissions, paying extremely high bonuses, and for what? For us to go out there and save people money and make sure that they're properly insured, right? I mean, it does the client no good if you insure them and they can't handle the worst case scenario. If they're on a bronze plan and the out of pocket is $13,000 for the family, and they're getting a zero premium, guess what? Chances are they can't afford a $13,000 deductible. But now, if you can go over there and move them to maybe a silver cost sharing plan now, or increase their benefits, now they might be able to handle worst case scenarios, because that's what insurance is all about: protecting you on your day-to-day stuff, and also making sure you don't file for bankruptcy if something happens to you, because at the end of the day, hospital bills are the number one reason why people file for bankruptcy. So do your part as the agent. Save your client money, increase their benefits, combo sell if they need an indemnity plan to help you with that deductible. I see ancillaries going through the roof. I mentioned, group and short-term medical will be probably negatively impacted, but the ancillary carriers are going to explode. I mean, my gosh, everybody needs this stuff now. And if you're lowering people's premiums, now guess what? Now you can add a dental plan on there without having to do any additional amount out of their premiums, right? Because you're already saving them money. You're just reallocating it now to add additional insurance that they needed before but couldn't afford it. So, folks, basically what I'm saying is the opportunity is now. And I can tell you, during this administration, it's going to be for at least another, I would say, a year and a half, 2 years, 3 years, who knows? But take advantage of this, because I don't think that we'll ever get another opportunity like this in our lifetimes, honestly, at least not as far as the individual market. So, obviously, folks, if you do have any questions, you can always contact us here at Messer Financial Group. We are here to help you. And the beautiful thing about this extension is if you have not yet contracted, you still have time to take advantage of it. It kind of killed the urgency now for a lot of these clients to enroll because they've extended it, which is okay. It gives us more time to be able to service our current clients and also reach out and try to find out new. And I don't know if they're going to extend it again. I doubt it. Because we're getting really close to open enrollment now for the winter months, and there's even talks of them extending that too. They may extend that from 6 weeks to 90 days. And also keep in mind, folks, that we are going to have a Spanish presentation of this as well. We're working on. So for those of you Spanish speakers out there, we will be doing one of these as well. So keep an eye out for that. And that's pretty much it, guys. I know it's a lot to throw at you. I don't want to have your heads explode, but I will take some questions. Jeff, do you want to ask some questions? I know there's a ton of them.
Yeah, trying to answer as many as we can do. For those who currently have coverage, do they have to be requoted to lower the premium, or will that happen automatically, Micah, after April?
So to be able to take advantage of the additional tax credits, you will have to update your information in healthcare.gov one way or another. Whether you want an additional quote or not, you're going to have to update your plan and then basically re-enroll into the lower premium plan. Also, keep in mind, folks, if they're changing carriers, if they've already contributed to that deductible and out of pocket, it's going to start over if you change carriers. And now, if you change plans within the carrier, there are some carriers I've heard that will continue, that will not make you start over. I think that's basically at the carrier's discretion. I'm still waiting on clarification on those. But keep that in mind. Plan changes will most likely start over their deductibles.
So with April 1st being really the first day where the new information will be uploaded into healthcare.gov and the platforms, what do you recommend, Micah, as far as how I handle my existing clients and servicing them? What would you do?
Well, I would absolutely reach out to them, let them know that there is an opportunity where they can receive tax credits to lower their premium or increase their benefits. But let them know, too, if they do nothing, then they can have that money. They can have it on their tax returns. So, I mean, I know that technically they're not paying for it, but really they are, because they're taking the money that the government is giving them and they're using it to increase their benefits, right? So do they want the free money, or do they want better health insurance or lower premiums? It's completely up to them, but only the client can decide that. And like I said, for my father, he was one of those people that said, you know what, I don't want to change. I think I'm just going to take the tax credits at the end of the year, and he doesn't have to do anything. Others, especially if you have some pre-existing conditions, or you're not healthy, you're going to need some treatment, you're definitely going to want to look at it. And if you don't let your clients know that at least that this is an option, then somebody's going to call them and present it in a way to where it seems like that they could qualify for this and write them. They're like, well, my agent never reached out to me. They never told me about this. That sounds interesting. What can I qualify for? So at least, if nothing else, let them know. In case someone else reaches out to them, they'll know what they're talking about and they won't be misled into something that's not necessarily true.
All right. Some of these are pretty detailed and more of a individual basis. So we ask these folks to reach out and contact us here at the office to talk about some of this.
I see one here. Somebody asked how many times can a client change from company? They can change monthly. They can go, like I said, they can change a company for May 1st, change it again in June, July, August, September. They can change all of those times. It's going to be an absolute nightmare for admin and commissions and everything else to have to deal with this. That's why I was saying earlier, I would have loved if they would have just had one effective day. Like, okay, fine, everybody can have all of this, but let's not have people actually go into effect until 9/1 or something. But hey, they wanted to do it this way, so it is what it is. And here's an example. So Ambetter on their bonuses, they have to make 3 consecutive binder payments in order for it to qualify to get that bonus. So with Bright Health, heck, you can write it. You can write it in May. They can change, and you'll get paid that very next month that bonus. And then if you flip it to another carrier, then you flip it back to Bright Health again. Guess what? You're getting paid again. At least that's how they're set up now. Will they change it? I don't know. But I'm telling you, the bonuses are very, very lucrative for agents right now. You should be able to make a fortune off of this.
Got a lot of questions about COBRA and how this will interact with COBRA. Have you got any information that you can share, Mike, on the COBRA aspect of this?
Yeah, so like I said, they're going to cover 100% of it from April 1st to September 30th. But it is going to have to be, let me go back up to here on this slide. It's going to have to be the employer that pays for that COBRA. And the subsidies will stop on the 30th, and then the government will reimburse the employer for that. So again, the employer pays the premiums for the COBRA at 100%, and then the government will come in and reimburse them.
All right. Keep going down the list here.
And again, guys, if you have not gotten contracted or you would like to work with us or whatever the case may be, I can assure you that, I stay up as much as anybody else can possibly do that on this marketing. I'd love to work with all of you and partner with you to make sure that you guys have everything that you need. We have an enrollment platform that we give out free of charge. We have the top level contracts with all the carriers. And we're in all the national companies we're contracted with. So would love to partner with everyone. Jeff, go ahead with another question.
Yeah, someone was asking about the plan eligibility. Can I choose a bronze plan, silver plan, anything above and beyond maybe the HSAs? What am I looking at as far as the opportunity here with the new subsidy amounts, Micah? What can I choose from?
Yeah, so, well, like I said, for one, if you can qualify for a silver cost sharing plan at 0 cost, that's the one you want. That's the one everybody's going to want, period. But as far as can you choose if you are paying a premium or you don't qualify for a $0 cost sharing, absolutely. You can do the base level bronze plans, silver plans, gold plans. If they offer platinum, you can do a platinum plan, whatever you want. But the subsidy is going to be based off of the second lowest silver plan. So when you're looking at it, there won't ever be, unless the silver plan for some reason will be higher than the gold plan, which I wouldn't see, there will never be a $0 gold plan or a $0 platinum plan. But there will guaranteed to be a $0 cost sharing plan if the person is below 150% of the federal poverty level. That's a tongue twister.
Let's go back and touch on the unemployment aspect. I think there's still some confusion or maybe a little bit of disbelief that if someone were to have received an unemployment check for a week or two and then was able to find employment, what would I still be able to qualify for and at what percent, Micah?
So again, if you received, I want to make this perfectly clear. if someone received an unemployment check for whatever amount and forever how long as they don't have any group coverage available to them that's deemed affordable, then them and their families, and this counts for the whole family, can enroll into a marketplace plan. And no matter what your income is, if it's zero, even if it's zero, you're still going to be able to be looked at the 133% federal poverty level. If you make zero to infinity dollars, it doesn't matter because they're going to look at your income they're going to put you at the 133% level. Okay. So, and if we look at our chart that I showed earlier, anybody that's 138% down to 100 is going to, and actually 150% down to 100 is guaranteed to qualify for. There is going to be a $0 cost sharing plan available. So if I make $1 million a year and I don't have affordable group coverage offered to me, and I can't enroll into my spouse's plan because they don't have one or it's deemed unaffordable, then you can go to the marketplace and get a $0 premium plan, cost sharing, silver. Yes, that is true. I know it sounds crazy, but that is the case.
Can you touch on those folks that maybe don't quite meet the minimum income requirements? Have we seen anything about that, Micah, at this point?
So I haven't seen anything in writing, unfortunately. So for those for those that live in those states that didn't expand the Medicaid, unfortunately, there's still going to be that gap in there for those that make too much to qualify for Medicaid and not enough for a subsidy. However, if they did receive an unemployment check, guess what? Now they can enroll. Okay, so all those people that make more than qualifying for subsidies, but not enough, qualifying for Medicaid, but not enough to qualify for a subsidy, if they received an unemployment check or their spouse received an unemployment check and they don't have group coverage available to them, they can sign up free of charge at the 133% poverty level.
Perfect. So they will be at the 133%. That's what they'd be.
If they have unemployment, if they received an unemployment check, yes. If they have not received unemployment and they're making too much to qualify for Medicaid and not enough for subsidies, then unfortunately, then they are still left out in the dark. Now, this isn't in writing anywhere, folks, but just as an FYI between me and all of you, there is no penalty for overestimating your income. I'll say that again just to make sure, and you guys can process it, take it for what you will. There is no penalty for overestimating your income. Next question.
Yeah, no, so somebody should take, into account a serious evaluation of what they're claiming for their income taxes, more or less.
Correct. We always want to try. Because you remember, guys, what are we basing subsidies off of? It's based off of the following year's income, your estimated income for the following year. So everybody that we enrolled last year during open enrollment, that was all based off of what we estimate our income to be for 2021. Okay, so anybody that enrolls today, it's going to be based off of what they think they're going to make this year. So let's try to get them to hit the minimum to get a subsidy. Let's really, let's encourage them to really try for it. And we're going to put that down because that's what we're expecting.
Perfect. And I think a lot of people are still curious about commissions and the bonus program. And we'll just say this, the carriers were a little bit caught off guard. Even though this was signed into effect on the 11th, the official announcement wasn't made until the 23rd. So we immediately reached out to all of our carrier partners to find out about will they be extending the bonuses and how this will affect commissions as we go forward, and still waiting to get that information back. But do want to point out that if you do nothing, right, Micah, then we know what your commission will be if you do nothing, right?
Correct.
It'll be
I
zero
can guarantee
if you don't do anything.
That's right.
Yes.
That's right.
But if you go out and make a serious effort, and we feel like the carriers will continue to support this from a commission and bonus standpoint, then this could be a windfall year for us. Would you agree with that?
Absolutely. And I do want to point out there's 3 carriers in particular. I mean, they're all doing great bonuses. So if you always want to do what's in the best interest of the clients. Cigna's has a bonus. Molina has a bonus. Everybody's got a bonus. But Ambetter, that 10 members, and you're getting a $100 bonus per member after 10, and that will go back to all of them. I highly recommend taking advantage of that. That is a huge bonus, and in an area where, especially down in Florida, guys, I've looked at a lot of areas and a lot of counties down there where Ambetter is going to be the only carrier that's going to have a $0 cost sharing plan in certain counties. Boy, that is a gold mine for you folks. That is, I mean, areas where you can take advantage of that. Bright Health is another one. $125 bonus per member. You write one member, that's $125. You write a family of four, that's 125 times four. And that starts immediately. On top of the fact that they're paying absurdly high commissions per member per month. And Oscar, keep this in mind, guys. Oscar is still paying a great bonus as well. However, they also advanced their bonuses last year during open enrollment. So if you end up rolling a lot of the book of business away from Oscar, then guess what's going to happen? They're going to end up making you pay for some of that bonus money back. So, you know, I wouldn't necessarily go and deplete your book of business on carriers that advanced you bonuses, but all of them are paying bonuses. All of them are lucrative. The only thing you guys need to focus on is making sure that you get your information out to as many people as you can, letting them know that this is the situation, that you can help them save money, that you can help them increase their benefits, and do what's in their best interest. That's all, and the money is going to come.
Michael, what about a little bit of a question regarding some immigration statuses? Who is eligible for these new levels and expanded levels for the cost sharing?
So I haven't heard, or at least I haven't been able to see anything in concrete writing about immigrants. But what I do know is if they're paying taxes, they will qualify.
All right.
Because remember, this is a tax credit. All of the subsidy money are tax credits. So as long as they're paying taxes, they're going to have eligibility.
Let's talk a little bit about marketing. Since it is such a broad opportunity, what would you recommend that agents do to reach the maximum number of people in terms of visibility and offering their services? What do you think the best way is to market this?
I mean, anyway, anything that you're, anyway and every way. I mean, if you got to stand on top of a mountain and scream it to everybody, then do that. Go on social media, plaster it all over Facebook, plaster it all over LinkedIn, wherever you can get out in front of people. Go, and I'll tell you what, go to malls. Malls are like a gold mine. The employees there, I guarantee, aren't going to be able to afford the group benefits that they're offering, if they even are getting group benefits, because most of them are part-time anyways. Go to salons, go to restaurants, go to anywhere where any small business out there and talk to them. Every small business, because they can qualify for subsidies. And the whole point why employers offer group coverage is so that they can help them with group health insurance benefits. But if the government's doing it for them, and I'll tell you what, so as we know, when you're on a group plan and you have a family, the only I guess the help that you get with the premiums is going to be for the employee themselves. The spouse and the children, you're going to have to pay full price with that, and that's expensive. If I can go and I can get, if I'm an employer and I can let my employees go and get their own insurance through the marketplace for the family, guess what? Now all of the family will get a subsidy and be able to reduce their premium. So in essence, it is better for the employees and their family to go into the marketplace rather than staying on the employer's plan, because that's only going to help the employee, not the family, which is why that family glitch is still there, unfortunately. So, you know, I would, as an employer, I wouldn't want to deter somebody from not being able to go and get a subsidy because I'm offering insurance that's too expensive for their family. You know, that's not fair to me as an employer. And again, if you got and I showed you guys just how crazy this is going to be with the subsidies and who's qualifying and how much they're going to increase the income levels to still qualify. I mean, families are the biggest ones. That's the whole key. And to be honest, I mean, with the way it's going, you know, group insurance may not even exist in the near future. I don't know. But one thing I can tell you is this administration is going to do everything they can to get as many enrollments as they possibly can. And not only that, but keep it at an extremely low premium, as I showed you earlier with those numbers. I mean, you've got millions of people now, a super high percentage of those that are going to enroll are going to have like $10 or lower premiums on plans. Everybody can afford that. And I said this on a previous webinar that of the people that enroll into the marketplace, it was like, and this was before all of this. This was last year. It was like 90 or 91% of everybody enrolled in the marketplace qualified for a subsidy. So what does that mean? That means that if you didn't qualify for a subsidy and you're relatively healthy, you weren't going to the marketplace. But now that they've increased who can qualify, everybody's going to jump in the marketplace now.
And Michael, let's say, for example, I was on an off marketplace plan, and because of the changes, what's my process for moving a client to that exchange plan at this point? What would I need to do?
You would just need to re-enroll them through the marketplace.
So cancel their existing coverage and make sure that the coverage dates coordinate, correct?
Exactly right. Yes. Make sure the cancel's on the last day before the coverage begins. Exactly.
Okay. Let's see here. We're running a little bit over our time slot here today, but we'll try to get a couple more.
And again, folks, and I'll put this back up here, this isn't the only place where you can ask questions. We have a whole team of people ready for your phone calls to answer questions. Whatever you need, we want you to make sure that you have all the update information so there's no confusion. I know it's a lot to throw at you. I know it seems crazy. It's like this doesn't even sound realistic. It's almost like we expect to wake up at any moment and see that everything's back to the way it was. But folks, they've been saying for a long time they want a Medicare for all type scenario, and this is one step closer to that. We knew that they were going to try to push for more enrollments. They're pushing for everybody to be able to have affordable insurance. And here's the reality, guys: the pandemic really shined a bright light on the disparities between those that have coverage and who are not insured. And the fact of the matter is, they noticed that people just weren't able to even afford what plans they were on. So that's why they're trying to get everybody on these cost sharing plans too. Because, like I said, if you're on a $0 premium bronze plan, there is no way that you can afford a $13,000 deductible. No way. I don't believe it. Because to qualify for a $0 bronze plan, you have to have a very low income. So $13,000, that's got to be at least half of their annual income, and who can afford that, right? So they want to make sure that people have the insurance that they need, especially when a pandemic comes out.
Perfect. Let's see, Micah. Again, Michael, what do you think the effects with the short-term medical plans will be as we continue to see this evolve through the Recovery Act?
Well, and I love short-term medical, and there's still going to be those folks that do make even higher than what the subsidies are going to be, and there's going to be others that really don't want anything to do with it. And as a matter of fact, I just had a client the other day contact me, and I told her about, hey, we might want to take a look at some of the changes with the marketplace as these increased subsidies are coming in, and you may actually qualify for a subsidy now. And they weren't interested even a little bit. They didn't care if they had to pay more. They just really didn't want to have anything to do with it. That was just their mentality. And at the end of the day, we got to give the client what they want. But as far as the far majority, again, if you've got a short-term medical plan and an ACA plan with similar benefits at the exact same cost, let's just say, I'm going to the marketplace. And the reason why is because it covers pre-existing conditions. And I don't have to worry about renewing it every single year or every 2 years or every 3 years, whatever term length you're putting them on. I mean, the big advantage of the ACA of the short-term medical was the lower premiums and being able to customize your plan. But if the lower premium part is out of it, I'm sorry, but that's going to be a hard sell, I think.
We'll end with this one question. This is fairly straightforward. How many times does a client have the ability to change during the open or during the special enrollment periods, Micah? And do you suggest them hopping around?
I don't suggest that. because again, you're every time you jump around, you keep starting over your health plan, and it's just quite frankly, a pain in the butt because you have to keep updating your information, and unless you want to just keep doing that, I don't know why. I mean, unless. But now to answer the first part of that question, you can change it every month if you wanted to during this SEP. Um, but I would not advise that. No, I would try to find a plan that they're happy with. They've got the benefits that they need at the premium that they want, and let it stick. And again, remember, we're going to have to do this again in the winter time. So when the open enrollment begins, we're going to have to do it for 1/1 effective dates for next year. And like I said, one thing I know for 100% certainty is things are still going to continue to change. So what this winter is going to bring, I have no idea.
Well, Michael, let me ask you a question. We did a webinar yesterday on dental, and we'll look to do a couple of more on some other carrier partners for that and some of the other indemnity products. With the cost savings that some of these folks are going to see, how do you recommend the agents position themselves to maybe go back and sell some ancillary products like a dental, like a vision, or possibly a hospital indemnity to help cover some of those costs that they still may face on a quality silver plan or a bronze plan?
Yeah, absolutely. So I showed in a slide earlier that just the national averages. Let me go back up here real quick and I'll pull it back up. Yeah, here it is. So many premiums will decrease on average by $50 per person per month and $85 per policy per month. Okay, so let's just say it's a single person. Let's just say that it is $50, which I can tell you in tons of areas it's going to be greatly more than that. But let's just say I save a single person $50 per month. Well, guess what? How much a dental product is? Less than that. Okay, so I just pulled that all the way down on their premiums for the same plan that they were on. Now I've got $50 to play with where, hey, you were paying that anyways. Let's get you something that you need now. Like, and I guarantee you, we've all had it. We sat down with a client who was talking about dental and they said, well, I just can't afford that. And it's hard to argue with that, right? Well, I'm not going to argue with you that whether you can afford it or not. But now I know for 100% fact that you can afford it because you could afford the $50 extra because that's what you were paying. And now I know that you can afford this. So let's go ahead and get your teeth fixed up for you.
Good stuff. And we could also look at a hospital indemnity as well, right? Right, Micah?
You could do hospital indemnities. You could do life insurance. And I recommend that for everybody. And I did that a lot even when I was doing short-term medical. One of my biggest plays for life insurance was, hey, I just, you were on an ACA plan. You were paying, a ridiculous amount. I just saved you $400 a month by moving you over to a short-term medical plan. Why don't we take that $400 now and make sure that your kids are protected or make sure that you're protected should anything ever catastrophic happen to you? And that's what I'm saying when I mentioned earlier, this ACA doesn't just grow your ACA book. It grows all lines of business. And I've said this before and I'll say it again. We have all heard that there are 10,000 people that are turning 65 every day, right? Jeff, you've heard that, right?
Yes.
There's more people turning 26 every day than there are turning 65. A lot more. So just keep that in mind, folks. Even the people that are already on a plan, there's even more that are coming off of their parents' policies and are going to need insurance too. So even if you just focused on the folks that are turning 26, that's like a super turning 65 list. Because once I sign them up, guess what? Now I've got them from the time that they're 26 all the way through the rest of their life, as long as I'm staying proactive with them and keeping the relationship. And I can't tell you a better income stream than that.
All right. Well, I think that'll about line us up for today. Ladies and gentlemen, please make sure that you're always opening and taking a look at Messer Financial Group's emails. As we get more details, we'll be back to share that with you. And as always, on our webinar workshops, we'll try to touch on whatever is relevant in today's fast-moving marketplace and also provide you some of those carrier opportunities to help add some of those sales inside of a home to make sure that you're maximizing your opportunities with each of your clients. So with that, I want to thank everybody that did attend. Micah, a few closing comments for us as we wrap it up here.
Yeah, just like I said, folks, this is such a huge opportunity. I think, and one of the biggest reasons, obviously, why I'm so passionate about it. I've been doing this a long time, and one thing I know for sure is that this business is all about being in the right place at the right time. And I can't think of a better opportunity to take advantage of than this right now. And I'll tell you, that's the biggest strength of being an independent agent, is that you're able to tilt wherever the opportunities are. So do your clients a service, do everybody that you know a service, let them know what's going on, get your name out there. April 1st, go find that new business, try to grow that book, and be extremely successful doing so. And again, we are here to help you, so you're not alone. That's the partnership that Messer Financial brings. If you're with a client, or you have a client that you're not sure what to do with, or even if you just have general questions or whatever the case may be, contact us. Let us know. We are here to help. We are your partners, and we want you to succeed. So that's all I've got today. Again, thank you so much, everyone, for taking the time out of your busy schedules to join us. Feel free to contact us anytime. We're here to help, and God bless everyone. Thank you.
And that'll do it, folks. Again, if you need help with contracting or have some of those individualized questions, give us a call here at the office and ask to speak to one of your marketing directors, and we'll get you set up and squared away. Have a great Thursday. Be safe and be diligent. And we thank you for your time. Take care.